We ended this week with the Fiat Federal Reserve saying next to nothing of market-moving importance at the annual Jackson Hole meeting. And yet more signs of a more multipolar world order upcoming. This past week, Saudi Arabia and Russia announced signing a new military agreement aimed at developing joint military cooperation between the two countries. Now, for the last 50 years, the U.S. has mainly been the supplier of military hardware and protection for the House of Saud in return for their pricing of their crude oil exports in Fiat Federal Reserve notes and in funneling much of their net profits into bonds or U.S. Treasury IOUs. It appears, after seeing how effective Russia has been in reestablishing their power in Syria, Saudi Arabia is hedging both its military hardware and perhaps too some strategic military alliances for its longer-term future. Billionaire bond investor Jeffrey Gundlach, the founder and CEO of the $137 billion double-line capital, says his number one conviction over the next several years is that the fiat US dollar will decline as a consequence of current economic policies resulting in the U.S. losing its dominant sole reserve currency status. The following clip is courtesy of Yahoo Finance.
In the aftermath of the lockdowns and the pandemic that continues to wear on, the strongest economy in the world by far has been the Chinese economy. And the U.S. economy has bounced back with a lot of consumption. A lot of that consumption is going to China. It's one of the reasons China has such a strong economy. So what we're seeing is the United States is starting to fall behind in economic growth. That's not a new thing. That's been going on for a generation, the U.S. falling behind. But the Chinese economy is growing so rapidly that the estimates as to when the Chinese economy will be the largest in the world keep getting pulled forward. 20 years ago, it was thought to be 2050, the Chinese would be bigger than the US, and that was 2040. And now the estimates are maybe it's in the 2020s, maybe even 2028, the Chinese economy gets bigger. And China's made no secret of the fact that they want to be a global player and have at least a seat at the table of global reserve currency status. And they're spending like crazy on military and have also made no secret of the fact that they want their military to be dominant, maybe the biggest in the world. Also, they have huge savings in China. They have a culture of savings. They sort of the gold medalists of saving historically. And so when you put all those things together with the US growing debt like crazy, we have debt to GDP that is fueling the majority of our so-called economic growth. So is it really economic growth when you borrow money or print money, send checks to people who turn around and buy goods on Amazon in addition to maybe paying down debt and speculating, and these goods come in from China? We're running our economy in a way that is almost like we're not interested in maintaining global reserve currency status or the largest military or global, let's call it superiority or control. And so as long as we continue to run these policies and we're running them more and more aggressively, we're not pulling back on them in any way. We are looking at a roadmap that is clearly headed towards the US dollar losing its sole reserve currency status. And I feel that as long as we run these policies, it's almost certain that that's going to happen. And because of that, the dollar should be going down. The value of the dollar is so high because we enjoy global reserve currency status, and we don't really respect it enough. We take it for granted, I guess. We seem to take a lot of things for granted these days in the United States, relative to how we thought about things in prior decades and generations. And I believe that we're setting the stage for us to, unfortunately, I use the word enjoy. I guess that's an experience, I suppose I should say, the consequences of our actions, the way we've been running a non-serious economic program now for really since 1980, but it's really accelerated so much in the past decade, and there's no signs of it abating. So that's the reason why the dollar is going to go down, and it's already peaked. I mean, it peaked at the Dixie Index at 103. There was a double top in January of 2017, and then right after the pandemic hit, and now we're living down about 10% lower. And I believe the dollar is going to take out the lows of the past down cycle. See, the dollar has been in a series of declining highs for decades. It goes back to the 80s. And for that reason, I think when we get to the next break to the lower level, the dollar is going to go past the most recent low of around 80 and even take out the low of 70. So I think there's easily 25% downside in the US dollar.
In this same interview, Jeffrey Gundlach also stated that while the gold price has really been in hibernation mode over the past year, he ultimately thinks gold is going to go a lot higher, given his conviction of the crashing Fiat Federal Reserve notes purchasing power to come. And while over the last year of time, both silver and gold spot prices have disappointed commodity bulls, if a 1970s-like stagflation is here and to come further, it was silver and then gold respectively which outperformed everything that decade. Perhaps we are merely now experiencing a calm before a rising storm. This week we'll have a look at the global gold market in the context of gold's value in the top 20 fiat currencies traded globally. What will it take for each market to see new record high prices by the end of this year, 2021? Hello there, on behalf of SDBullion.com, this is James Anderson with a quick SD Bullion market update. Before we go further, please smash the like button so other sound money stackers can also see this content. And be sure to subscribe to our SD Bullion channel so you can get our latest market coverages and also a chance at winning incredible bullion giveaways like this one.
Raise your hand if you like free stuff. We were going to give away a free tube of the brand new 2021 Silver Eagle coins. Then we said, nah, make it 25 tubes. SD Bullion is giving away a monster box of 2021 Silver Eagles. How many coins are in a monster box? Let's just say one lucky participant is going to be showing off their best celebratory dance moves with 500 shiny new silver bird friends. So head over to sdbullion.com/sweepstakes for your chance to win.
Click the link below to enter your chance at winning this 2021 SD Bullion Type 2 American Silver Eagle Coin Monster Box giveaway of 500 Silver Eagle coins. Official sweepstakes rules can be found at www.sdbullion.com/sweepstakes. Good luck to all of you who enter and for your chance to win. Both the silver spot price and gold spot price traded in the black this week, up slightly from last. The gold-silver ratio tightened, likely to end the week at 75. Gold bullion buying in Germany has hit high levels not seen since following the global financial crisis in 2009. One look at Germany's rising inflation data of late, and one can understand likely why those who inherited experiences from the 1920s Weimar hyperinflation remain cautiously and more aggressively buying gold bullion allocations now in 2021. Both in Germany and too in the USA, we keep getting new inflation data at high levels not seen since the early 1980s, the last time we suffered under a stagflationary nightmare, back when actually raising interest rates was possible instead of now where we cannot do that due to record high nominal debt levels growing. With 4 months remaining in this year, 2021, we're going to examine the moves that gold's going to have to make in each of the 20 largest fiat currencies to reach new nominal price high levels by the year's end. We begin with the fiat Brazilian real, which needs an 18% move to reach its recent former gold price high set in 2020. Onwards to the fiat Turkish lira, which is only about 10% off from its record high price set in 2020. Next, the fiat South African rand, which has consolidated a large amount since setting its 2020 record high price for gold. The fiat rand price for gold will need a 35% surge from here to have any chance of setting a new high this year. Onwards to the fiat Russian ruble, which is only about 15% off from its recent 2020 high. And the fiat Indian rupee, which interestingly mimics the fiat rubles chart that we just looked at. It's also only about 15% off from its 2020 gold price high. Next, the fiat Mexican peso, which needs about a 27% jump to threaten its 2020 gold price high. The fiat Norwegian kroner is only about a 15% move from potentially breaking a new record price high, and the fiat Singapore dollar is similarly only about 16% away from its new future all-time price high for gold. A similar story for the fiat South Korean won. It's only 16% away from the new gold price high level. And the fiat Swedish krona also about 16% away from a new gold price high level. And the fiat New Zealand dollar has a 20% climb ahead to reach a new peak gold price. And now we're going to move into the top 10 fiat currencies by FX trading volumes. The fiat Hong Kong dollar is about a 15% move away from its 2020 peak price for gold. The fiat Chinese yuan renminbi currency is now nearly a 25% move away from its 2020 record price spike. The fiat Swiss franc gold price needs to rise by about 14% to make all-time price highs from here. And our fiat Canadian dollar printers to the north, their gold price needs nearly a 22% rise to make new all-time price highs from here. The fiat Aussie dollar gold price needs about a 17% increase to find new all-time price highs. And the once 12 troy ounce sterling silver, but now full fiat British pound, its gold price in Britain needs an increase of about 20% to make new all-time highs. And for the fiat Japanese yen, the gold price only needs to climb about 12% from here to find new nominal price high levels. And for the fully fiat European euros currency, its gold price needs a 15% boost from current levels to find new record price highs. And finally, the fully fiat Federal Reserve note, the fully fiat US dollar, the same one that Jeffrey Gundlach began this SD Bullion market update by stating his number one conviction trade is that the US dollar will be losing its global reserve currency dominance, perhaps in this decade playing out. It also requires gold to go up roughly 15% from here before the end of the year to hit new nominal price high levels. And basically, that's the gold price climbing about $250 per ounce within the next 4 months. Let us know in the comments below how many of you think this is possible in your respective fiat currency. And as always, I want to thank you guys for watching. Take great care of yourselves and those that you love. If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.